Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that have picked up all buy ratings from Wall Street analysts. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We came across today's stocks using the TipRanks stock screener. We got there by headed to Stock Screener under Research Tools over on the TipRanks website. Of course, we're looking for a strong buy consensus. I also wanted at least a neutral or outperform on the SMART score and some double-digit upside potential. This narrowed down our list here below, and then I start looking for some solid blue circles here on the right. You can check out the TipRanks stock screener for yourself over on the website, or also available on the mobile app, which you can download using the links in the description down below. Now let's get right into our 3 unanimous strong buy stocks. First on the list is a company I might be mispronouncing, but I'm sure you guys will correct me in the comments if I am. I believe it's called Ingersoll Rand. Trading under the ticker IR, the stock is priced at $94.21 per share. It has climbed 46% in the last year, settling down here in the last 3 months, up 2.7% overall. Ingersoll Rand is a global industrial manufacturing company providing mission-critical flow control and compression equipment. The company dates back to 1872 and provides a range of industrial equipment, including air, fluid, energy, and medical technologies. Their products include compressors, compressed air treatment and control equipment, pumps and fluid handling systems, and consumer and commercial tools. In just the last few weeks, the company has both announced multiple new acquisitions, plus the divestiture of some asbestos liabilities. They announced the close on ILC Dover and announced the acquisition of 3 additional companies. This will help add new technologies for life science applications, including innovative powder and liquid single-use solutions for various end markets, including biopharma, pharma, cell and gene therapy. On top of this, they also announced they'd be divesting their asbestos liabilities to a company called Delticus. This removes the liabilities from their future balance sheet, allowing them to focus on their growing market reach. They shared their first quarter earnings report on May 2nd. Not only did the company come out with an earnings beat, they saw record first quarter revenue and adjusted EBITDA, leading them to increase some future guidance. Ingersoll Rand reported Q1 earnings per share of 78 cents, beating expectations by 9 cents per share, and their first quarter revenue came in at $1.67 billion, which was up 3%. Adjusted EBITDA of $459 million was up 15%, and their backlog remains at nearly historically high levels. Following these results, they did raise their 2024 guidance, adjusting their earnings per share guidance to a range of $3.20 to $3.30, which would be up to 8 to 11% to the prior year. Following that quarterly report, we heard from one 5-star analyst at Goldman Sachs. They reiterated their buy rating on robust financial performance and positive future outlook. Their optimism is bolstered by their robust market quote line activity in April and strategic pricing actions, which they believe will support strong incremental margins going into fiscal 2024. He said that Ingersoll Rand is seen as well-positioned to continue compounding value thanks to their consistent execution track record and a robust balance sheet with low net leverage. Their unanimous strong buy consensus is based on 6 current analyst ratings, and the average price target comes in at $104 for an upside potential of 10.5%. Looking at our recent ratings here, on the low end we do have a buy rating from Wells Fargo with an upside of 4%, and our high-end price target comes from Citi with an upside of 19%. Second on our list today is Atmus Filtration Technologies. They trade under the ticker ATMU, currently priced at $28.31 per share. They've grown 42% in the past year, seeing big gains here in the end of March going into April, have cooled off a bit recently in the last few months. Atmus Filtration designs, manufactures, and sells filtration products under the brand name FleetGuard. They offer fuel filters, lube filters, air filters, crankcase ventilation, hydraulic filters, and coolants, as well as fuel additives. The company's products are used on highway or off-highway commercial vehicles, agricultural, construction, mining, and power generation vehicles and equipment. Atmus Filtration is still fairly new to the public market, with their IPO occurring in May of 2023. So this past earnings report near the start of May marked their 4th ever earnings report as a publicly traded company, and they did come out with an earnings beat. For their Q1, they reported earnings per share of 60 cents, beating estimates by 3 cents per share and going 4 out of 4 as far as beating those estimates. Net sales came in at $427 million, which did also exceed expectations, and the company reaffirmed their guidance for 2024. Several weeks ago, we did have a 4.5-star analyst from Robert Baird who increased their price target on the stock. They said that although U.S. freight markets remain sluggish, their marked cash shipment data appeared to support their first quarter ATMU aftermarket expectations. Continued stabilization in on-highway markets would also be aligned with their aftermarket forecast. Atmus Filtration also has 6 current analyst ratings, all coming in with a buy. And their average price target comes in at $36.17, implying an upside potential of 27.5% from current prices. Looking at those ratings down below, they're fairly closely grouped together here. Our low-end price target is 19% upside from Goldman Sachs, several at 30% there, which is our high-end price target. If you've made it to our third stock today, this is your reminder to make sure you hit that thumbs up button and that you're subscribed to the channel as well. Third on the list is a company called VSE. They trade under the ticker VSEC, currently priced at about $83 per share. Their stock has climbed 55% in the past year, growing 8.8% over the last few months. VSE is a logistics and services company engaged in the provision of engineering and technical support services. They deliver parts and provide maintenance and repair services that keep global transportation moving. They operate through 2 key segments. Their aviation segment is a top provider of aftermarket parts distribution and MRO services for the aviation industry, while their fleet segment focuses on parts distribution, engineering solutions, and supply chain management tailored to the medium and heavy-duty fleet market. Following record revenue for 2023, they reported their first quarter results on May 8th, where they did come out with an earnings and revenue beat and some notable year-over-year growth. For their Q1, they reported earnings per share of 87 cents, beating expectations by 15 cents per share. They had total revenues of $241.5 million, which increased 28%. They also saw their aviation segment report 43% revenue growth and record adjusted EBITDA margins of 17%. They completed their first quarter with record financial results all around. Looking at the analyst ratings for the VSE stock, notably we have all 5-star analysts, one of those coming from B. Riley Financial. Following that Q1 report, they raised their price target by $10, saying that they believe fiscal 2024 is a year of execution that is setting up 2025 to be a year of greater adjusted EBITDA growth. Now, they do just have 4 current analyst ratings, but like I said, all from 5-star analysts and all with a buy. That strong buy rating comes with an average price target of $95.75, implying an upside potential of over 15%. And looking at those ratings down below, on the low end, we do have an 8% upside here from RBC Capital, and a high-end price target is B. Riley Financial at $101 for an upside of over 21%. So that is a quick look at 3 stocks, all coming in with unanimous strong buy ratings. Let me know your thoughts on these companies in the comments down below, and whether you'd heard about these companies or not. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.